Now guys, let's discuss the agenda of this S&P 500 weekly technical analysis for the week of March 20th, 2023. That is from March 20th, Monday to March 24th, Friday. So the first point of the agenda is S&P 500 technical analysis on the weekly chart. So we will see that what is happening on the weekly chart, the big picture, right? So just like this is what I told you that because of the bearish engulfing, no matter what happens in the entire stock market, there will be a red candle. Okay, so we have seen the weekly engulfing in the Dow Jones and as well as in the S&P 500 because it was a Dow Jones. So Dow Jones was able to fulfill its technical obligation even before the S&P 500 could do so. That is why we have seen this the fulfillment of obligation in the Dow Jones and not in the S&P 500. So the weekly chart means the big picture. Then comes the second point of the agenda of this S&P 500 weekly technical analysis. And the second point of the agenda is the S&P 500 support and resistance levels. So now we will see that what are the support and resistance levels for the next week. And for example, last week I clearly mentioned, okay, that S&P 500 will be able to hold and sustain above 3840 and 3790. So there is a zone. This is a 50-point zone from 3840 to 3790. No matter what, any kind of fall, any kind of heavy fall, then also S&P 500 will be able to survive above the zone. However, when it moves up, then it will find very good or very heavy resistance in the zone of 3937. So most likely the movement will be confined, okay, in between these two levels. However, if there comes a breach of the zone of 3937, then we have other levels, but up to 3977 or 3978, and in an exceptional case to 3991. So this kind of support and resistance levels, okay, I'm going to give you for the next week. Then comes the third point of the agenda, and the third point of the agenda is the S&P 500 technical analysis on the daily chart. So I will tell you that what is going to happen in the, what is happening in the S&P 500 on the daily chart, how it is working, okay, and how the technical indicators are affected by that particular movement. And if there is any change in the technical indicators from bullish to bearish or from bearish to bullish, okay, so everything. So this is the daily chart. Weekly chart was the Hawkeye view. The big picture, the daily chart is it will give us an idea what is going to happen in next 1 to 2 weeks or 1 to 3 weeks. Okay, means kind of short term picture. Okay. Then comes the fourth and the final point of the agenda of this S&P 500 weekly technical analysis. And this the fourth point is the S&P 500 probable movement from March 20th, that is Monday, to March 24th, Friday. So likewise, okay, last week I told you that whenever it comes down, then it will hold, and either a hold or a bullish reversal will be there. When it moves up, then this will act as a bearish opportunity, go bearish, it came down, hold, and then it moved up. So this kind of probable movement, like what is expected to happen on Monday, what will happen on Tuesday, then Wednesday, Thursday, Friday, okay, until Friday. So like this is what I mentioned, that on Friday, no matter what, there will be a red candle. A red candle will be there, okay. However, in case of the S&P 500, a red candle up to 3862 was supposed to be there, okay, but it came down to 3901. Okay, so it missed almost 1%, okay, fall. So that was supposed to be there. Anyways, the red candle means the red candle, okay, it was there. So I will tell you in this the fourth point of agenda that how it is working, what it is, okay, and how it is supposed to work, etc. Now, guys, there is one more thing, that this S&P 500 weekly technical analysis, okay, it may be a bit lengthy. That is why I have made these the sections, okay, these are sections or the chapters in this the S&P 500 weekly technical analysis for your convenience, so that whichever section or whichever chapter you want to watch or skip or rewatch, you can, okay. However, I strongly recommend to watch this the entire S&P 500 weekly technical analysis, because there is a lot of information, tons of information that you might not get anywhere else. So guys, before I discuss the S&P 500 technical analysis on the weekly chart, the first point of the agenda, okay, just one last thing, and it's the disclaimer to this S&P 500 weekly technical analysis, that this S&P 500 weekly technical analysis is not a financial advice in any form or in any manner, right? Secondly, this S&P 500 weekly technical analysis is not about any kind of trade setups, because I do not know how you are going to interpret my S&P 500 weekly technical analysis. That is why whether you are making 300% or 400% profits within a day, or you are seeing 20-30% losses within a day, these profits and losses are all yours. Okay, but still I try my level best to clear each and everything so that there is no point of any kind of doubt. Okay, but if there is any doubt, then please feel free to ask your questions through the comment section, right? So guys, once again, if you have not subscribed to my YouTube channel, then please subscribe to my YouTube channel. Now guys, let's begin with the first point of the agenda of this S&P 500 weekly technical analysis. And the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Now let's see what is happening on the weekly chart. Now guys, we are here and this is the first point of the agenda, that is S&P 500 technical analysis on the weekly chart. Let me write it down. W as in weekly. So weekly chart means that one candle represents 1 week, not 1 hour or 1 day. One candle means 1 week, one entire week. Now first comes the candle itself. Okay, so if you look into this, the candle, it's a bullish candle. Okay, not a heavy bullish candle, not a heavy bullish candle. Okay, it's a normal bullish candle, and this normal bullish candle, it has formed after this the heavy bearish candle. Okay, so and also we have seen that it tried to move up and then it hit 3964 or 3965. Okay, so what it indicates, this simply indicates that the S&P 500 is trying to hold. Simple, that S&P 500 is trying to hold. However, its bullish sentiments are not that heavy, okay, as compared to these the bearish sentiments. So when we talk about these the bearish sentiments, so there are heavy bearish sentiments. Okay, so the bullish sentiments are simply saying that the S&P 500 can try to hold. Okay, rather than to give up heavily, it can just try to hold. That's it. Okay, it is not saying that there will be a bullish reversal of this thing now. Okay, however, yes, on the daily chart we can see 1 or 2 bullish candles. Okay, that's not a big deal, normal. However, everything that comes here into the picture, it will simply indicate that the S&P 500 and the entire stock market just want to hold. It just want to hold and nothing else. That's the only thing, right? Now, so this was a candle. Now let's talk about the technical indicators. And there was this one more thing, okay, that was supposed to happen 100%, okay, but it missed just by 2 points or 3 points. Okay, let's see. So now, the first thing is the Bollinger Bands. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed in between the lower band and the median of the Bollinger Band, this means that the S&P 500 is bearish on the weekly chart, right? Then comes the moving averages. If you look into these, the moving averages, there was almost a confirmed crossover. Almost a confirmed crossover, okay, and that was supposed to happen. It was 100%. It was supposed to happen, but by 2 points, yes, only by $2, only by $2. Okay, this crossover, okay, it did not happen in the previous week. Okay, means a bearish crossover, it did not happen in the previous week. What it indicates? This indicates that in the next week, okay, if there comes a red candle, okay, or a small bearish candle, then we can expect this crossover to happen. Okay, other than that, if there comes a bullish candle in the next week, then also the crossover will not happen. If there comes a bullish candle, okay, another green candle or a good green candle, then also the crossover will not happen. Okay, and then it can bring more uncertainty to the entire stock market, because if there comes no crossover in the moving averages, and if the picture remains like that for next 1 or 2 weeks, okay, then there will be like 50-50 chances, 50% bearish chances, 50% bullish chances. Okay, because in that case the S&P 500 on the weekly chart may form a slip. Means rather than a crossover, rather than a confirmed crossover, okay, it came down very near and then it moved up. Okay, a bullish slip. Okay, so it will be called as a bullish slip. Bullish slip means that in that case the S&P 500 will then move up. So we need to wait for at least 1 week or so, a minimum 1 week, okay, in order to see whether a crossover is happening or not. And it's not just the moving averages that will define a bullish the slip, okay, or the short-term bullish trend, okay, but it will also be defined by some other technical indicators that we are discussing here. Okay, So there are some other factors, but yes, this is the primary factor. This is the primary factor. As of now, S&P 500 has closed below these the moving averages, but there is no crossover in the moving averages. So once again, on the weekly chart, the moving averages are neutral, as simple as that, neutral. Okay. Now comes the Ichimoku cloud. Because the S&P 500 is trailing, it is trading below the Ichimoku cloud, and also it has closed below the Ichimoku cloud. This means that through the Ichimoku cloud, S&P 500 on the weekly chart is bearish, clearly bearish. Now comes another important factor, very, very important part, very, very important part. If you notice, last week I have clearly mentioned that on the weekly chart, almost like 100% clear that there will be a bearish crossover in the MACD, because we are expecting either a thin bullish candle or a red red candle. Okay, so that will clearly force the MACD to crossover, okay, to give a bearish crossover, and that was there. It happened until Friday. It happened when the S&P 500, it was trading around 3905 or below 3905. Then there was a confirmed bearish crossover. Okay, but then in the last 30 minutes, it moved up and closed at 3916. Okay, so very, very clever this thing. Okay, it was, so it failed to give a bearish crossover here. Okay, now the MACD is 1.96 and the signal is 1.81. Okay, however, unlike the moving averages, okay, MACD has the potential to crossover next week. Okay, I guess irrespective of any candle, until and unless there comes a very heavy bullish candle, okay, chances are less, or very thin. Okay, if there comes a heavy bullish candle, then only we can expect a that the MACD, okay, it might not give a bearish crossover. Okay, otherwise MACD will give a bearish crossover. Okay, the only problem is with the moving averages. Okay, EMA. Anyways, so for now, it's MACD. Yes, so MACD is more than the signal. So this means that the MACD is giving a bullish, okay, a bullish signal to the S&P 500. It is giving a bullish support to the S&P 500. Then comes the stochastic RSI. Stochastic RSI K channel is less than the D channel. K channel is clearly less than the D channel. This means that the S&P 500 on the weekly chart is bearish to the stochastic RSI. Then other these are technical indicators, saturation, okay, volatility, etc. This is all normal. So now so this the picture is that 3 bearish, 1 bullish, 1 neutral. This means that the S&P 500 on the weekly chart is 80% bullish, 80% bearish, 80% bearish. Okay, 80 to 85%. Okay, it is bearish. Okay, just one more confirmation from the MACD, and then doesn't matter whether the moving averages crosses over or not. Doesn't matter. Then the entire stock market, the S&P 500, everything will fall. Okay, as simple as that. So this is clear, bearish on the weekly chart, S&P 500. Okay, it is clearly bearish, right? So guys, once again, if you have not subscribed to my YouTube channel, then please subscribe to my YouTube channel. And also, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then I've given the link in the description of the video and also in the comment section. Now guys, let's move on to the second point of the agenda. And the second point of the agenda of this S&P 500 weekly technical analysis is the support and resistance levels for the S&P 500 for the coming week. So guys, we are here, and this is the second point of the agenda of this S&P 500 weekly technical analysis. And here we are going to talk about the support and resistance levels for the S&P 500. Okay. So the support and resistance levels, so once again, 3840 to 3790. Okay, it is in the picture. This is a very strong support zone, very strong support zone. Okay. Now this time, okay, there is a little change. And the change is that because the S&P 500, it has already found very, very good support, okay, and it has acted as a very strong cushion. This means that whenever whenever it comes down, so you can see 1, 2, 3, okay, on 3 days, okay, means it has fulfilled its technical obligation, done. Now, whenever there comes a heavy fall, that heavy fall is permitted. Secondly, if the S&P 500 want to breach the zone of 3840 to 3790, this time it can. This time it is allowed. This time it is permitted. Okay, so it is not like that it will come down and it will again bounce back. No. Okay, yes, intraday there are chances that it can come down and it can bounce back, but again, okay, you will notice that it is coming down, and if it want to breach, and if you see that it is breaching this the zone, then yes, this time it is allowed, it is technically permitted. Okay, so in this the resistance side, so we have the topmost, this the resistance at 3991. Okay, this is 3991. Okay, as of now, there is nothing okay beyond this the 3991 in the picture. So technically, again, see guys, I'm talking about my technicals. Okay, however, there is an event on 21st and 22nd. Okay, this is the Federal Reserve meeting. Okay, FOMC minutes. Okay, will be published. And if there comes a positive signal, okay, some kind of positive, for example, if the Fed say that they are not going to raise the interest rates, okay, however, chances are less, okay, because recently the European Central Bank has raised the interest rates by 50 bps. Okay, this means that the Feds are also expected to raise the interest rates, if not by 50 bps, then by 25 bps also. Okay, but the interest rates, okay, interest rates will be increased. Okay, this is highly likely. Okay, but if there comes a scenario where the Federal Reserve Chairman he says that no, we are not going to raise the interest rates for this month, and also there is no meeting in the month of April, I guess. This means that whatever will be the rate hike, it will be in this month only, because there is no FOMC meeting in the next month. Then the next meeting is in the month of May. Okay, so whatever relief the stock market is going to get, or this the S&P 500 is going to get, okay, it will be in this the month of March and the month of April. Okay, if there comes very heavy selling in the month of March, then in the month of April there may come a short-term bullish retrace. Okay, so again, we need to see that what the Fed chairman and these the okay board members okay they are saying. And again, and guys, it's not just about the rate hikes, okay, by 25 bps or by 50 bps. It's also about like what they are saying. So if they say that we are seeing okay this a decrease in this the inflation, okay, or this the inflation is coming down and it will further come down, okay, so that's a good news. If there comes positive tone from these from these board members, okay, and the Fed chairman himself, in that case, through that the positive tone, okay, or through this the better economic outlook, okay, we can expect that yes, in that case there are chances that the S&P 500 can breach, hit and breach the 3991. Okay, so first it has to hit, then has to struggle for at least 1 day or 2 days. Okay, then only it will be permitted to breach this level. Now, whenever it breaches the zone of 3991, then again 4035 will come into the picture and it will be able to handle the upward movement. But once again, technically, so far, technically, okay, anything beyond 3991, okay, that is not expected. Okay, technically not expected. But yes, only through the FOMC, okay, it can work. Otherwise, no. Anyways, guys, then the next this okay resistance level, okay, it is at 3965. Okay, 3965. Then we have the 3937 zone. Once again, the zone of 3937 comes into the picture, and now it is more important. Once again, it is more important because the closing on Friday, it was below the zone of 3937. Okay, this means that once again the zone of 3937 it is in the picture, right? Then we have the next resistance level at 3907. Okay, this is the 3907. Then we have 3884. 3884, okay, it worked very well. 3884, okay, as a support and resistance. Then comes the very heavy cushion, okay, from 3840 to 3790. Okay, this is going to act as a support. 3884, okay, it will also act as a support. Then this will also act as a support. Then comes the next, these are some more support levels, and then we have 3790, okay, another support. Then we have 3760, another good support. Then we have 3735, 3695. Okay, there is one more here, and that is 3710. This 3710, from 3710 to 3695. Okay, this is another good support, very, very strong support. Okay, Then the next we have 3665, and then we have 3630. From 3630 to 3585. 3630 to 3585. Okay, it is again a very strong support. This means that in the next week, whenever the S&P 500 comes down, it can breach the zone of 3840, 3840 to 3790. Okay, 3790. But whenever it comes down, then it will find very good support, okay, here at 3710 or 3695, and then it can come down to this level. However, in the next week, in the coming weeks, okay, a breach of this level, okay, so far is not expected. Technically, it is not expected. Okay. So guys, I will discuss more, okay, this thing that how this the downward movement, okay, and how this zone 3937 and upward zone and this zone, okay, it is exactly going to work in the fourth point of the agenda, and that will be the S&P 500 probable movement for the week of March 20th. Okay, means the coming week. Before we move on to this, the third point of the agenda, that is the S&P 500 technical analysis on the daily chart. I have this very important information to share with you, and that is regarding this my YouTube community, that how you can join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500 from Monday through Friday, as well as these the stock market opportunities, minimum 5 to 10 every week. In order to join my YouTube community, you can use the links I have provided in the description of the video and also in the comment section. Or you can simply use this, the join button, JOIN, that is there just below the title of this video. So when you click on this, the join button, this JOIN join button, then this pop-up will open. In this pop-up, you will see that there are these the two options: daily S&P 500 updates and the updates and opportunities. So daily S&P 500 updates means that you will get each and every update from Monday through Friday, daily analysis, daily precise movements of the S&P 500. And this the updates and opportunities means that you will get the daily S&P 500 updates from Monday through Friday, as well as the opportunities, 5 to 10 opportunities every week. And if you notice that many people have joined my YouTube community for last many months, and it's going to be approx 1 year. So they have joined my YouTube community and they are getting the daily updates, the daily analysis of the S&P 500 from Monday through Friday, as well as these the opportunities in the entire stock market. So guys, whenever you want to join my YouTube community, you are welcome. And guys, just one more thing, that once you have joined my YouTube community, then you need to visit my channel page, and on this my channel page, you need to click on this the community tab. You will find each and everything, all of the updates here in this the community tab itself, all of the updates in the community tab. And if you are using the YouTube app on your mobile phone, then you will get the notifications and you can get these the updates on your mobile phone. So guys, once again, I have given the link in the description of the video and also in the comment section. Or you can simply use this the join button that is there just below the title of this video. Now guys, let's talk about this, the third point of the agenda, and the third point of the agenda is the S&P 500 technical analysis on the daily chart. And daily chart means that the one candle represents 1 day, not 1 hour or 1 week. One candle means 1 day, right? So let me write it down, 1 day. Now, if you look into this, the last candle, it's a bearish candle, clearly. A bearish candle, okay, where you can see that the open was the high. Open was the high. So this clearly indicates that there are good or there are heavy bearish sentiment. Secondly, the shape of the candle, okay. So the shape of the candle, okay, as such it is not defined. However, if we look into the candle, it's a heavy bearish candle, okay. But the only problem is that this candle, it has formed after a very heavy bullish candle, and it failed to break this the bearish candle. Either, okay, means even this the open of this the this the bullish candle, even the open of this the bullish candle, okay. This means that this candle is simply saying that although there are bearish sentiments, okay, the S&P 500, if it wants to hold, then it can hold. It is allowed to hold. If it want to hold, then it can hold. Hold means a bit up or a bit down, okay, and this. So that is permitted. Okay, that is permitted and that can happen. That's not a problem. Okay, that's not a big deal. So this is the only thing, okay, with this the red candle, right? Now guys, let's see what the technicals are saying on this the daily chart. Okay, so technicals on the daily chart. First comes, there is the lower band of the Bollinger Band. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 on the daily chart has closed below, in between the median of the Bollinger Band and the lower band of the Bollinger Band. This means that the S&P 500 on the daily chart is bearish through the Bollinger Bands. Then comes the moving averages, clear fan out, clear bearish fan out in the moving averages. Secondly, the closing is below all of these, the moving averages. This means that S&P 500 is clearly bearish through the moving averages on the weekly chart. Then comes the Ichimoku cloud. Because the S&P 500 has closed below the Ichimoku cloud on this the daily chart, this means that the S&P 500 is clearly bearish on the daily chart through the Ichimoku cloud. Now let's see what other technicals are saying. So MACD is less than the signal, and both MACD and the signal both are negative. This means that the S&P 500 is bearish through the MACD. Now comes the stochastic RSI. This is wonderful. This is wonderful. On Monday itself, the K channel, okay, it was 0 for the stochastic RSI. And that was the reason that on Monday, I clearly told this to my YouTube community members that, guys, see, on Tuesday, we are going to see a gap up open, okay, or irrespective of any open and upward movement. This is there because it found very good support, okay, here in this zone 3840 to 3790, as well as the K channel is 0, okay. As early as on Tuesday, there will be a reversal. If not on Tuesday, then on Wednesday, there will be a confirmed reversal. But now, anytime from Tuesday or Tuesday onwards, there will be a bullish reversal. This is technically there. Okay. So now it has fulfilled its technical obligation, stochastic RSI, and now the K channel is more than the D channel. So now we can clearly see that the stochastic, the S&P 500 is clearly bullish through the stochastic RSI. Okay. Now comes the divergence. Divergence is normal and all other technical indicators. Yes, the volatility has moved up. Volatility has moved up. And why the volatility it has moved up? The only reason is the banking sector. Okay. This is the time that when you cannot bank on the banks. Okay. Now you can clearly see that only through the stochastic RSI, S&P 500 is bullish. Otherwise, all technical indicators are aligned bearish. This means that on the daily chart, the S&P 500 is 90% bearish, 90% plus bearish. Okay, clear? Fine. So guys, once again, if you're not subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. And if you want the daily updates, the daily analysis of the S&P 500 from Monday through Friday, each and everything, and also the stock market opportunities, then you can join my YouTube community through YouTube membership. I have given the link in the description and also in the comment section. Now guys, let's move on to this, the fourth point of the agenda. And the fourth point of the agenda of this S&P 500 weekly technical analysis is the probable movement of the S&P 500 from March 20th, which is Monday, to March 24th, that is Friday. Let's see how exactly the S&P 500 is expected to behave or move, or is expected to give the kind of moves and the momentum in the next week. Yes, we are here, and this is the fourth point of the agenda of this S&P 500 weekly technical analysis. And here in the fourth point of the agenda, we are going to talk about the probable movement of the S&P 500 from Monday, that is March 20th, to Friday, that is March 24th. So from Monday through Friday next week, okay, what is going to happen in the S&P 500? So guys, there are a few things that you must understand or that you must remember. Okay, the first thing is that the recent week, okay, we have seen this is the CPI data. Okay, yes, I agree and I accept that my technicals were saying that a reversal or a hold or a reversal, okay, it must be there in the CPI, in the inflation. Okay, last week in my previous S&P 500 weekly technical analysis, I've clearly mentioned that. and I've shown you that how the technicals are saying. Okay, and also if there comes a fall, then that fall will be like 2-3%, around 3% at max or so. Okay, that's it. But there will not be any heavy fall in the inflation. That was 100% clear. Okay, so last week, okay, I have expected, okay, if there comes a fall, then it will be up to 6.1. Okay, so in the previous month, the inflation was 6.4. Okay, so I mentioned this thing that if there comes any fall in the inflation, it will be up to like 6.1, but we have seen 6.0. Okay, so I missed it by, okay, this the 0.1. Okay, or I can say that we were expecting a hold, okay, or a bullish reversal. So this was not as per the expectations. Okay, anyways, but now there is a very heavy saturation in case of this, the what we say, the inflation. Very heavy technical saturation in the inflation, and that very heavy saturation in the inflation can give now this time. So see, this is what I mentioned, okay, in previous months, that if there comes like back to back, okay, this the saturation, okay, or if there comes a very heavy saturation back to back, very heavy saturation, then what will happen? Then in the month, okay, for example, we were expecting this the reversal in this the March 2023, but now we are expecting a bullish reversal in the month of April 2023. So it means that whenever there comes a bullish reversal, it will be very heavy or very heavy because of the very heavy technical saturation. The technicals in case of the inflation are saying that the inflation is trading at the bottom, although it is 6.0. Okay, means it is 3 times of the expected levels of the Feds. Feds say that it must not cross 2%. Okay, but now it is 6%, 3 times. What it means? This simply means that, but technically, okay, technicals are saying that it is so much saturated that it is trading at the technical bottom. Okay, technical bottom and technical the top, it can come anytime. Okay, there is no fixed this the limit. It all depends on the technicals. Okay, this means that whenever there comes this the reversal in the inflation, it will be heavy or it will be very heavy. So just be ready for that. Okay, I will discuss this more in detail in next month. Okay, when the CPI will be expected. Okay, now that was first thing. Second thing was the PPI and the manufacturing. PPI and the manufacturing, okay, this was there. So manufacturing, okay, it has again declined, okay, but the PPI has also declined at the same time, okay. So CPI, PPI, okay, both are in the favor of the market, but the manufacturing, okay, it has declined. So decline in the manufacturing sector, okay, because see, everything that we consume, okay, it is manufactured, okay, in some factory, okay, or somewhere. So a decline in the production, this means that it can push the inflation up. It can force the inflation to move up. Okay. Decline in the production means that people will consume, okay, whatever they are consuming. Okay, whether it's it's about the food, okay, or it's about clothing, okay, or computers or whatever. People will consume whatever they are consuming, but if the production comes down, okay, in that case the inflation will move up. In that case, the prices will rise. Okay. Now there's one more thing that there's the beginning of the summer. Okay, next month. Okay, means we are going to expect, okay, a drought. Yes, the drought in many European, okay, regions and as well as American regions. Okay, that will simply impact the food. Okay, so less production of the food and more okay, there's a demand, and again there will be the floods in the Asian countries. Okay, so far, okay, these the Asian countries has fulfilled the demands of other countries or the regions like European region or the American region, but now, okay, everywhere the same thing, the same climate and everything. Okay, this climate change and whatever. Okay. So food, okay, so inflation. So the data is good. So far, the data is good. The only data that is not supporting the stock market is the manufacturing sector. Okay. So yes. Now, why I have discussed the CPI and PPI, okay, these things. The reason was that this time, okay, when the Feds are going to okay, discuss the economic, okay, this the economic matter, okay, and the inflation and the rate hikes, okay, on 21st of March as well as on the 22nd of March, okay, 21st and 22nd. So what will happen is that because of the better than expected or in line, okay, no, not in line, but you can say better than expected. So what will happen is that now because of this, the CPI and the PPI data and some other data, okay, considering that the manufacturing sector, yes, CPI data itself does not mean that every sector is doing well. No, okay, only one or two sectors are doing well. Okay, otherwise all sectors, okay, they are not good. Okay, but CPI is the cumulative data, but the facts they look into each and every data. Okay, so if the Feds, okay, if they look into this thing and if they think that yes, it is quite convincing and they can stop these the rate hikes and everything is good. Okay, sorry, not stop. Okay, but if they think that rather than raising the interest rates by 50 bps, if they can raise by 25 bps, okay, or in an exception scenario, if they say that no, we are not going to raise the interest rates. Now the question is that why the Feds will say that we are not going to that we are not going to raise the interest rates. Okay, although chances are just less than 1%, less than 0.1%. Okay, but if that happens, then that will not because of this that okay this thing the CPI PPI, no, that would be because of the failure of the banking system. Okay, so we have recently seen, okay, the Silicon Valley Bank, then the Signature Bank, then the First Republic Bank, and on this day, on Thursday, there was a news, okay, that the banks are going to infuse, okay, other banks they are going to infuse the money in the First Republic Bank. Okay, there was a news, okay, but even that did not help the entire stock market to hold, okay, but still, okay, it came down, right? So back to back, the okay now the banking sector we have seen that it is not in good shape. Okay, what it means? This means that if the Feds, if they think that by raising the interest rates or in raising the interest rates, okay, heavily, it can simply break. It can simply break the entire this the banking system. In that case, okay, they can think of this particular thing that not to raise the interest rates this month. However, okay, why I'm saying that why the chances are less than 0.1%. The reason is that Feds are meeting in the month of March, okay, and there is no meeting in the month of April. What it means that now there will be the next meeting in the month of May. Okay, so there is a vacuum between this the March and April. Okay, this also means that now Feds can raise. Okay, there are very little chances that they can go for the 50 bps. Okay, before this the failure of this the banks, it was almost confirmed 50 bps, but now 25 bps is what is in the picture. Okay, and it is not, once again, it is not just about this the rate hikes, okay, but it's also about the guidance. It's also about what they think, what they are thinking, okay, what they are projecting, and the tone of the Federal Reserve Chairman, okay, and the other board members, right? So it is not that easy. So if you are my YouTube community member, then 22nd, 21st and 22nd, okay, I will tell you what is happening, and accordingly you can change your trades if you want to trade, or you can simply just modify your, okay, these are trades, or you can simply enter into this the bullish or the bearish trade. Okay, the only thing that can change the picture, okay, even before the Feds, it will be what? It will be only the banks. If there comes a news from the bank that this bank has failed, then again a very heavy fall. Okay, in that case, even if the Feds, okay, they come into the picture, and even if they want to give some kind of support, that support then will be limited in terms of this the what we say, the S&P 500. Okay, it will be around 3884 at first, and then 3937, and then 3991. Okay, at most, even in the best case scenario, then this will be there, right? So guys, if you want to understand the situation, then you can just look back in what has happened in 2008. 2008, the Federal Reserve came into the picture, the government came into the picture. Okay, they bail out the banks, but still, okay, that did not work, and again the entire economy entered into the recession, right? So there is no guarantee that if the Fed support the banks and the government support the banks, then also, okay, the situation will improve. There is no guarantee, because in 2008 we have seen the failure. Okay, even if means they have supported very well, but again there was a failure, right? So as we have seen that because it was a Dow Jones that has fulfilled the technical obligation last week, okay, and it then compelled, or it then stopped, or it then forced the S&P 500 to not to fulfill the technical obligation. That is why there was not, so it has missed this the 1% fall. Okay, otherwise 1% fall, just like Dow Jones, it was there, it was supposed to be there, right? So this was the reason, anyways. So now, guys, if you notice, okay, or if you look into this, okay, this is the pattern. Then what you are going to notice, okay, okay, and this is what, when we look into this, so when we look into this as chart, okay, this is what we can clearly see, that this is happening and this is happening this way. Okay, this is a zigzag or this is a staircase pattern. What it means? This means that see, as of now, I cannot comment that what kind of open they will be there, okay, on Monday, because the entire stock market is heavily volatile. Okay, that is the first thing. Secondly, the closing was not perfect. Okay, so that I can comment that what kind of open will be on Monday. Okay, but now what we know is that if there comes any open that is above 3960, okay, or it will be better if there comes any open above the zone of 3937. Above the zone of 3937 means the S&P 500 will have to give more than 0.60% gap up open on Monday. Okay, then only 0.55 or 0.60 or 0.70. Okay, more than that, then only there will be a gap up open. If that happens, then what will happen? If that happens, in that case, at first the S&P 500 will try to come down. Okay, just a little bit. Okay, momentum as of now, we do not know the momentum. Okay, heavy or little or what. So it will come down. Okay, then again, but now because it has opened above the zone of 3937, so it will try to survive. It will try to hold. It will try to hold above the zone of 3937, because when it holds or when it survives above the zone of 3937, then only there are chances that it can move towards 3980 or 3991. Okay, that's it. Right? So whenever it hits the 3980 or 3991, then it will fall. Or if it struggles in the zone of 3937, then also it will fall. Okay. If there comes any open below the zone of 3937, and if it try to move up, then it struggles, then also it will fall. Okay. The reason is that the trend is bearish. Simple. So the trend will simply pull the S&P 500 towards itself, because the trend is bearish. This means that there will be a bearish pull. Okay, fine. So in the bull side, the story is there is nothing much. Okay, in this the bull side. Okay, but again, 21st, 22nd. I guess it will be 22nd. Okay, when 22nd they will publish the numbers. So this means that on Monday and Tuesday, okay, March 20th and March 21st. Okay, we can anticipate that there will be a normal movement. Okay. But on 22nd, it will be the 22nd where we can expect that there will be a good movement or there will be a heavy movement. Okay, and that will be based on the rate hike. Okay, that how much they have raised the interest rate, and whether the terminal rate has changed or not. If they say that no, we are going to increase or we are going to raise the terminal rate. Okay, in that case, again, a very heavy fall. Okay, rise in the terminal rates means that the Feds are anticipating more rate hikes of 25 or 50 bps. Okay, that is further, and this any kind of rate hike, even the 25 bps rate hike, simply means that it is going to impact the banks heavily, because the economy means the banking system. Okay, as of now there is a globalization, and all of us, we use the banks, the credit cards, okay, and everything. And if the banking system is in the problem, okay, in that case means the entire economy is in the problem. Okay, this means that the stock market cannot just defy the banking system and then it can say no, the banks are not doing well, no problem, the stock market will move up. No, that will not happen. Okay, if the banking system is in problem, this means that the people, okay, they won't be having much money, or they will try to withdraw their money, or they will then not put their money in the stock market or whatever. Means there are many reasons. Okay, so this simply means that even a 25 bps rate hike, okay, it will put some pressure on the banks. Okay, but now what can help the stock market to move up? If there comes a positive tone, if there comes a good guidance, okay, or something like that, but it will be clear only on 21st and 22nd, not before that. So once again, if you are my YouTube community member, okay, then on these 2 days, 21st, but most likely on 22nd, okay, I will give you the back-to-back updates. Okay, just like okay, I did the last time, and you have made very, very good money. Okay. Anyways, now whenever the S&P 500 comes down, this time what will happen? If there comes a very heavy fall, then this time it will, this the zone. Okay, this is a very heavy zone, very heavy support zone, or very strong cushion. Okay, very heavy, very strong. Okay, this is the support zone. It will be able to hold the S&P 500 for like 1 day, for 4 hours, 3 hours, 2 hours, 1 hour. Okay, but this time it will be a short hold. It will be a short hold. This time the S&P 500 is technically permitted to breach the zone. It is technically permitted to breach the zone. That's it. It is as simple as that, right? And then there is one more thing, because the closing of the S&P 500, okay, it was below all of the moving averages. Thus, it has brought some bearishness, okay, with it. Okay, so this because of this kind of closing on Friday. So now, okay, it is there. So any breach, okay, intraday it can hold or it can try to hold, but eventually, okay, it will give up, and then there will be a fall. Okay, but this fall or this heavy fall will not be on Monday and will not be on Tuesday. Okay, yes, not on Monday or Tuesday. So when I say heavy fall means 3%, 4%. Okay, that is not expected to happen on Monday, Tuesday, or yes, we can also include Wednesday. Okay, means if there comes a fall, then 1% fall, 2% fall, up to, okay, that is fine. Okay, but not a very heavy fall. That is not in the picture. Okay, 1%, 2% fall is acceptable. Okay, this again means that because of we are expecting 1 or 2% fall, this means that whenever it comes down, that intraday, okay, or at least for 1 day, it will find support. Okay, then the next day or the subsequent day, okay, if it comes down heavily, then yes, then it is permitted. Technically, it is permitted. Technically permitted. Then no one is, then no support zone. Okay, it is going to hold the S&P 500. Now there comes further fall. In that case, the next good support, it comes 3710 to 3695. 3710 to 3695. Okay, this is the next good support that will be able to hold the S&P 500. Okay, at least for 1 day we can expect that it will be able to hold. Okay, if there comes further, okay, or a very, very heavy selling, then in case that yes, okay, further selling is allowed, and then it can come down. Okay, further to what? Then it can come down to 3630 to 3585. Okay, but in the next week, as of now, we can say that in the next week, okay, anything beyond 3695 is as such not possible. Okay, or not in the picture. But if there comes, okay, there's the further fall, then at max to 3630 3585, and then a reversal. Okay, that's it. Now guys, there is one more thing here, okay, that we must consider. It is the Dow Jones. So what is with this, the Dow Jones? Dow Jones has come into, in a particular, okay, this situation where the weekly candle of the Dow Jones is a kind of dozy. Means not exactly dozy, okay, but we can say that it's a spindle. It's a spindle. Okay, and what is the meaning of a spindle? A reversal. Okay, simple. This is the meaning of a spindle. When we look into the body of the spindle, okay, it is supporting bullish trend. Simple. Okay, it is supporting, means very, very short term, not the bullish trend. It is simply supporting some bullish sentiments. Secondly, it has closed below this, the Bollinger Band, below, okay, this the Ichimoku cloud, okay, but above, okay, this average. Okay, this means that now the technicals are saying that on Monday, yes, on Monday or on Tuesday, we can expect something bullish. Okay, how much it will be? In case of the S&P 500, it will be defined by the open of the S&P 500 on Monday. Okay, because the open inside the zone, okay, or below the zone means it has to struggle. Okay, but an open above the zone means it can move up, right? So the upward movement in the S&P 500 will come not because of the S&P 500, no. It will come because of the Dow Jones, and that too, and that also because of the Dow Jones on the weekly chart. No other chart will tell you, okay, this thing, but it is on the weekly chart. Okay, but it's not. See, I'm not saying that the weekly candle it will be a bullish candle. No, see, because most of the times what we have noticed or what we have observed is that the thing is that whenever such situation is seen, particularly okay, kind of a spindle is there, very heavy bearish angle, a very heavy bearish engulfing is there. We can expect some initial this is the bullish movement, and then suddenly something will happen. Something will happen that can simply bring it down. Fine, simple. So we can expect a candle where there's a wick, okay, and then there is a body, okay, some kind of this kind of body, okay, or yep, this kind of body, okay, or this kind of candle, right? In case of the S&P 500, when we apply okay this principle of the Dow Jones in case of the S&P 500, then the S&P 500, okay, if it want to move up once again, okay, this is what I mentioned, it can move up to 3937 zone, okay, or at max to 3980 3991, okay, then it will give up. And now yes, it is perfect because here we also have this the lower band of this the Ichimoku cloud, okay, that will also support. See when it came down, okay, here then it was the Ichimoku cloud as well as the zone of 3937 that gave a very good support, then a reversal, right? Similarly, when it moves up, then again it will struggle, okay, here around this Ichimoku cloud, then struggle, and then okay, again it will come down. So guys, once again, the movement in the next week, okay, it is not that simple and straightforward that every day you will see, okay, these the red candles and one day you will see green, and no. Okay, it is not straightforward. It is, so we can simply divide it into, okay, these two parts: Monday, Tuesday, Wednesday, and then Thursday and Friday. Okay, so Monday, Tuesday, Wednesday, okay, 20th, 21st, and 22nd. Sorry, no, we need to divide it into two parts like this: Monday, Tuesday, and then Wednesday, Thursday, Friday. Wednesday, Thursday, Friday. Okay, Monday and Tuesday we can expect this is the bullish reversal that we are expecting. Okay, if the bullish reversal has to come, then it can come on Monday and Tuesday because there is no such big news. Okay, nothing is going to interfere. Okay, yes, banks, do not forget the banks and do not bank on the banks. Okay, banks. So it will be only the banks that can if the banks want to drag down the S&P 500 and the Dow Jones, then yes, banks can do. Okay, but otherwise there is no such news. This means that on Monday and Tuesday, okay, if there has to come a bullish reversal, then it is allowed on Monday and Tuesday. It can come on Monday and Tuesday, right? Then from the Wednesday, okay, the picture will change. Okay, because on Wednesday, the Fed chairman, okay, he will mention, okay, or the Feds, okay, or this, sorry, not Fed chairman, I guess it will be the FOMC release, and in the release, okay, we will come to know, okay, what they are thinking, okay, what are their plans, and how much, okay, is this the rate hike? Is as simple as that. Then from the Wednesday and Thursday and Friday, so first it will move up, means in simple words, okay, we can expect that on Monday and Tuesday, okay, it will try to move up. Okay, then it will find resistance, very heavy resistance, it will struggle. Then on Wednesday, Thursday, Friday, it will come down. Okay, if we talk about, okay, in the plain and simple term, then this is the picture. Okay, but again guys, next week is not that straightforward, and even if it would have been that straightforward, then also we cannot forget about the banks. Banks are simply making or adding a lot of confusion, volatility, everything, and even a simple movement is getting more and more complex, right? And if you notice that on March 17th, and if you notice that on Friday, I mentioned this thing, okay, to my YouTube community members, that the top American banks pledged the $1 billion support to the First Republic Bank, not because they think First Republic Bank has potential to survive and to grow, no, but because they fear that if these small banks go down, then soon something worse can happen, and these big banks can also face the heavy heat. This means pumping $5 billion is a good deal rather than losing $50 billion or $500 billion when the mayhem happens, right? So this is how I help my YouTube community members, okay, to trade safely. This is the up, down, okay, these are the movements. And it's not just about the daily S&P 500 updates from Monday through Friday, but it's also about, okay, these the stock market, but it's also about these the stock market opportunities. So I give these the stock market opportunities to my YouTube community members who have opted for updates and opportunities. So minimum 5 to 10 opportunities every week. Minimum 5 to 10 opportunities every week. So guys, if you also want to get these the daily updates and the daily analysis in order to trade safely, okay, in this the volatile environments, okay, in this the volatile market, okay, then you can join my YouTube community. I've given the link in the description of the video and also in the comment section. And guys, if you have liked this video, then hit like. And if you have any questions, if you want to ask anything, then please feel free to ask through the comment section. So guys, once again, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and click on the bell notification icon. So guys, this is my S&P 500 weekly technical analysis for the week of March 20th, 2023. That is from March 20th, Monday, to the March 24th, that is Friday.